Oil prices are slipping, but is this the calm before a storm? With U.S. and Russian officials preparing for crucial talks over Ukraine, the global energy market is holding its breath, and what happens next could hit your wallet faster than you think. Oil prices are on the move again, slipping lower as traders, governments, and energy companies wait for the outcome of high-stakes U.S.-Russia talks over Ukraine. This isn't just another market headline. The results of these discussions could reshape global supply chains, influence inflation, and change the price you pay at the pump. In the next few minutes, we'll unpack why prices are dipping now, what's at stake in these negotiations, and how the outcome could impact you directly. Oil prices have taken a noticeable dip, and the timing couldn't be more significant. With high-level talks scheduled between the United States and Russia over the ongoing Ukraine conflict, the global energy market is entering a period of tense anticipation. Traders, governments, and consumers are all watching closely, knowing that the outcome of these discussions could have direct consequences for economies and households worldwide. In early trading today, Brent crude, the global benchmark, fell by just over 1%, with West Texas Intermediate following a similar pattern. While a 1% move might not sound dramatic in an energy market as sensitive as this one, it reflects a shift in sentiment. Analysts point to cautious profit-taking by traders who are reluctant to make bold moves before knowing the results of the talks. In other words, the market is in a holding pattern, not yet committing to a new direction until it hears from the negotiators. The backdrop to these developments is the ongoing tension in Eastern Europe. Since the start of the Ukraine conflict, oil prices have been highly reactive to geopolitical news. Any sign of escalation, whether through military activity, new sanctions, or threats to supply routes, has tended to push prices higher. Conversely, any indication of progress in negotiations can bring prices down, at least temporarily. That's precisely what we're seeing now, a modest dip driven by cautious optimism that diplomacy might deliver some stability. There are several key issues that could emerge from the U.S.-Russia discussions. One is the potential adjustment of sanctions. Over the past 2 years, Western nations have imposed a range of restrictions on Russia, targeting both its energy exports and its financial networks. If these measures are altered, even slightly, it could open or close certain trade channels, instantly affecting global supply. Another factor is production strategy. While OPEC sets quotas for its members, Russia, as part of the OPEC Plus alliance, plays a crucial role in global output decisions. If Moscow signals a willingness to coordinate production levels more closely with other producers, it could help stabilize prices. On the other hand, if talks break down and tensions escalate, supply disruptions could push prices sharply upward. Currency strength is also playing into today's price movement. The U.S. dollar has gained ground in recent weeks, as investors seek safe haven assets amid uncertainty. Because oil is priced in dollars worldwide, a stronger dollar makes crude more expensive for buyers using other currencies. That can reduce demand and add downward pressure to prices, amplifying the effects of market caution. Market observers note that demand projections remain cautiously optimistic. OPEC still expects global oil consumption to grow through the year, citing recovering travel, industrial activity, and seasonal demand. However, these forecasts hinge on geopolitical stability. If the U.S.-Russia talks fail to produce even a modest framework for future engagement, those projections could be challenged. Beyond the numbers, the stakes are high for both businesses and consumers. Airlines, shipping companies, and manufacturing industries rely heavily on predictable fuel costs for budgeting and operations. Even small fluctuations in oil prices can have a ripple effect on ticket prices, freight costs, and the price of goods. For households, changes at the crude level often translate directly into higher or lower costs at the gas pump and on energy bills. The next 48 hours will be critical. The tone and content of the talks could either ease fears and encourage stability or reignite concerns that send prices higher. If diplomats signal progress, even without a full resolution, the market could continue its downward trend in the short term. But if discussions collapse or lead to increased tension, the reaction could be swift and volatile. For now, traders appear unwilling to make big bets. Trading volumes are lighter than usual, and volatility indicators remain subdued, a classic sign of a market in watch-and-wait mode. This calm could quickly vanish once the first statements from negotiators hit the newswires. Oil prices may have dipped today, but the bigger picture remains uncertain. The U.S.-Russia talks are more than just a diplomatic formality. They are a potential turning point for energy markets, global trade, and economic stability. Whether these discussions bring relief or renewed pressure, one thing is clear: their impact will reach far beyond the negotiating table. We'll continue to monitor every development and bring you timely updates. If you found this breakdown useful, make sure to hit the like button, subscribe to the channel, and turn on notifications so you're always informed about the forces shaping our world and your wallet. The next chapter in this story will be written at the negotiation table, and its impact will be felt from global trading floors to your local gas station. Whether the talks bring stability or spark fresh volatility, one thing is certain: the stakes couldn't be higher. We'll be here to keep you ahead of every development. If you found this breakdown useful, give this video a thumbs up, subscribe to the channel, and turn on notifications so you never miss an update on the events shaping our world.